Hello everyone and welcome to Moementum channel where we talk about finances, personal development and investing. In this video I want to talk to you about the recent decline in the stock market and my strategy in addressing that. When the stock market faces sudden declines and the value of the stocks and the price of the stocks drops drastically, the immediate reaction by a lot of investors is to panic and they want to get out of the stock market before they lose much and not lose all the hard-earned growth in their stock market value. What I'm going to show you today though is why as a value investor you should not be frightened by this decline in the stock market, and instead you should rather welcome that in the short term, because this short-term pain would translate into a long-term gain for you if you stay on course with your long-term vision and strategy and fully take advantage of this decline in the stock market in the short term. As you've seen in the past videos on this channel, I mainly invest through passive stock market investing by purchasing and buying a diversified portfolio of exchange traded funds. And I use Wealthsimple for passive stock market investing. In this video, we're going to take a look at my portfolio with Wealthsimple and analyze and understand how I'm taking full advantage of these recent declines to purchase more of the exchange traded funds at a lower price compared to what they were being sold at a couple of weeks ago. So let's get into it. Right guys, so here's a look into my portfolio that I have with Wealthsimple. As you can notice, back on February 22nd, the value of my portfolio was closer to 42.2K, whereas there was a considerable decline in the stock market during that 1 week. Dow Jones lost several thousand points, and this was the biggest 1 week decline in the value of the Dow Jones. In fact, the value of my portfolio went down to closer to 39.5K. This shows almost a 3,000 decline just in a span of a week. Such drastic decline in the value of your one stock can certainly cause some panic for many investors. But the way I see it, this is just a short-term pain. In fact, if I do not intend to sell my positions or cash out, there's nothing to worry about. This provides me with a massive opportunity to buy more quality stock and exchange traded funds at a fraction of a cost. To demonstrate that, let's take a look at one of my accounts and looking at the recent activities for this account. If you scroll back to February 21st, we could see that on that day, my deposit of $69 was spent to purchase a number of different exchange traded funds. And one of them was VTI, or Vanguard's Total Stock Market Index. The share price for VTI on that day was $225.62. The $25 that was spent to purchase VTI could only buy me 0.11 shares of VTI. Now, if we scroll up, looking at February 27, that day the price was drastically lower. In fact, the VTI was then priced at $208.77. On that day, my $57 managed to buy me 0.27 share of VTI. Same thing goes for the other days. I believe if you look at February 26, the price might have been slightly higher. At that day, VTI was priced as $212. Similarly, if you scroll back and take a look at March, and March 2nd, the price of VTI on that day was again $204. In fact, it was even lower, $204.92. So the point that I'm trying to illustrate here is how in the times that the market is doing poorly and the value of your stocks or exchange traded funds have declined, by selectively picking the right stocks or exchange traded funds, you could take full advantage of the lower cost and take advantage of the dollar cost averaging. Now, in my case, because I invest through a robo-advisor and I choose to invest through passive investing, there are a number of quality exchange traded funds that Wealthsimple purchases for me. And in days like this day, where the value of those quality exchange traded funds have gone lower, Wealthsimple automatically spends more money to purchase those quality stocks and shares for me, allowing me to take full advantage of market declines over the long term. This is a great strategy if you are in the stock market for the long term, which in my case, certainly I am. I consider myself more of a value investing. These are the funds that I intend not to cash out or use in the short run, and therefore I'm more and more aggressive in investing in the stock market in times like this when the stock market prices have gone down. There you have it, folks. I hope you found this video of value. What is your strategy when it comes to stock market investing and in the times of stock market decline? Do you tend to purchase more aggressively or cash out and stay on the sideline? Let me know in the comment section below. If you found this video of value, please make sure to hit the like button and subscribe to our channel. On Moementum channel, we post weekly videos about finances, investing, and personal development. Until next time.